And then just finally, you had some common mistakes just
Yes.
to warn people about what
So
are the
these
things
are the things
wrong?
I've come across doing people's tax returns or checking tax returns as well. The first one, blindingly obvious, make sure you get your tax return in on time.
Oh yes, yeah.
There's an automatic £100 fine
Yeah.
if you don't get it in. What a complete waste of money. Make sure you do it. If you don't understand how to do it, get somebody to help you.
And there's an extension on the deadline, I think, if you do it online as opposed to the
Yes.
paper version.
So if you do a paper version, the paper version has to be in by the 31st of October after the 5th of April year end.
Yeah.
If you do an online one, it's 31st of January the following year. So you get an extra 3 months
Okay.
if you do an online one.
So if you're a new landlord, you've got no clue what you're doing, it's November the 1st, and you think, I haven't done my tax return, it's not too late.
It's not too late.
Get someone who knows what
Yeah.
they're doing.
So
to
the
help
first
you.
thing you should always do when you first start renting your property out is register with the revenue for self-assessment.
Yes.
If you leave that too long, you get to say the 1st of November and you've not done it, then you've got to register, you've got to wait time for all the registrations to come through. Now, particularly if you don't do it till the middle of January, you might not get your registration in time to complete your tax return, and that is your fault.
And you'll get fined.
And you'll get fined. You can say, oh, the revenue didn't send me this. No, you left it too late. You'll get fined. So get your registrations in as soon as you start.
Yeah.
And then it's all sorted. You've got your numbers and everything. Online is much the better way to do it
Okay.
because it will calculate your tax for you and everything. So yeah, get it done on time and pay it on time.
Yes.
And be aware if you earn a bit of money from rental properties of the payments on account system, because you can end up with a hefty tax bill in your first year.
Yeah.
So put money aside for it.
Okay.
Ask an accountant if you don't
Yeah.
understand. And most people don't
No,
understand the payments on
most
account.
people definitely don't. Yeah. Okay.
So the second one I put was about the interest element on the mortgage.
Yeah, because that used to, all interest on a residential or a buy-to-let mortgage used to be claimable.
Yeah.
But
That's been restricted over the last 4 years, a gradual drop in the amount that you can actually claim.
Yeah.
So the first thing about interest, first of all, you can only ever use the interest. You cannot use the repayment element of a mortgage, and I've come across many people who've done that.
Okay.
So what happens with interest now is it's not claimable as an expense on the tax return. It's claimable as an allowance.
Right.
So you still put the interest figure in, but not as an expense. There's a separate place to put it on the tax return. And you can only get a 20% maximum tax relief on that.
Okay.
So there's 2 consequences of that. One is it affects the ownership a lot more because if you're a 40% taxpayer, you can only get 20% tax relief on the interest. So you want more of it in the 20% taxpayers.
Yes.
thing. The other thing it does affect actually is things like child benefit claims. Now, people didn't realise this when it came out. At 50, if you've got somebody earning 50,000 or more, it affects the child benefit claim.
Yeah.
And what used to happen was, if you had £10,000 of rental income, £6,000 of interest, you had a £4,000 income from your rental.
Yeah.
And that's what they worked out what your income was. Now your income is the full 10,000.
Right.
And the 6,000 is an allowance. It doesn't count. So if you say earn £45,000 a year,
Yeah.
and you earn a 4,000 profit from your rental, you're still under the 50,000.
Right.
You now earn 55,000, and your child benefit is restricted.
Okay.
So the interest, how you work out where the interest goes, becomes more and more important.
So that's again where it'd be helpful to sort of tweak the ownership.
The ownership, yes, because
Okay.
if you've got someone on the borderline of that child benefit cut off,
Yeah.
or potentially on the borderline of a 40% income, that the calculation of the interest becomes a massive issue.
Yeah.
So get the property into a lower taxpayers'
Definitely.
ownership.
Yeah. Okay. Any more serious mistakes to
So
avoid?
the next one comes back to how this particularly affects people who've held property for a number of years and hold furnished property.
Okay.
So on a tax return, you used to be able to claim what's called a 10% wear and tear allowance.
Yeah.
So basically, if you've had a furnished property, whatever that rented out for, you claim 10% of that income as an expense.
Yeah.
Because that's basically covering the wear and tear of your furnishings.
Mm-hmm.
That no longer applies. All you can claim now is the cost of replacing anything that's in your property.
Okay.
So first of all, the property must be furnished.
Yeah.
And it's only the replacement cost that you can claim.
I do know of a little get around for this actually, which if anybody wants any more info on, I'm happy to share. But there are landlords who rent furnished properties, and there are landlord furniture companies whereby instead of replacing furniture, you kind of rent it. So that then goes down as an allowable expense.
Yes.
So instead of buying new furniture, once you're done with the rental furniture, you just rent new furniture.
Yeah, because what happens, where this specifically catches people out is when they buy a property and they think, right, I'm going to furnish it. So they buy a new bed, a new sofa, a new telly. You cannot claim for that because that's not replacing anything, that's buying something brand new.
So you would think that you could offset all of that, but you can't.
You can't. When that telly breaks and you replace it, then you can claim the cost.
Okay.
So that first initial purchase of stuff to go in your new property is not allowable.
Right.
And that is harsh. To put it mildly, it's harsh. But it's how the new system works. So, and a lot of people get caught out with that.
Yeah, I can see why.
Because they get, and I understand why. You put something new in your property, you think, oh, claim that.
Yeah.
No, you can't.
Okay.
And it does actually question whether you want to furnish. You'd know more about the difference in values.
Not particularly common in this area. There are some parts of the country where it's expected that you would rent somewhere fully furnished. Personally, I rent unfurnished, and that's one of the main reasons.
So yeah, that's third one. The fourth one, and this one is one that causes people to get fined. When you buy a rental property, you must declare a tax return, even if that property makes a loss.
Yes.
But a lot of people get the property, they spend a bit of money on it, they make a loss in the first year and think, oh, I don't have to tell revenue about that. You do, and it's in your interest to do it.
Yes.
The loss is claimable against any future profits. So if you've got £1,000 loss, it reduces your profit in the next year by 1,000. It will save you tax.
So by not declaring your loss, you're essentially overpaying.
You're overpaying when you do declare a profit.
How long is that valid for?
Forever.
Indefinitely.
Indefinitely. So if you do make a big loss. So
if you had a real clanger in your first year and lost £10,000, you can still offset that against the loss for years to come.
So it's absolutely in your interest to make sure you fill in a tax return.
Definitely.
Also, if the revenue find out, and they do find out, you get a £100 fine or worse.
Even though you made a loss.
Even though you made a loss.
And you wouldn't have been paying tax anyway.
So they will say you didn't declare it. They can fine you as well for not registering in time. So register and declare it. It's absolutely in your interest to do so.
Yes, yeah.
So that's the fourth one.
Okay, so hopefully we've helped some people avoid some common mistakes. I actually think they probably are really common mistakes. You know, a lot of the kind of tax connotations are not obvious to most people. And especially if you're new to it, if you're a new landlord, there are some easy mistakes that you can make that can cost you a lot of money. So
yes,
hopefully we've helped avert some.
I hope so.
Thank you so much, John.
That's all right, thank you very much.
It's been an absolute pleasure meeting, and I hope that this is helpful to a lot of people.
I hope so too.
Take care, and I'll speak to you soon.
Thank you very much.